Hello, here we are again on the Two Russells podcast, the Property Pulse, testing the pulse of the overall property market. We've made episode 12, Russell.
Who would have thought? Who would have thought? So I think we can call it somewhat of a success, can't we?
Yes, and you were telling me earlier that we need to get to 20, and we have got some stunning guests lined up through August, September into October that takes us to that magic number.
I think we've got enough lined up. And the other thing to say though is sorry if we've said no. I know that sounds kind of a ruthless thing to say, but the success of this already has warranted that lots and lots of people are asking to come on it. We will get to you, but we have a vision. We have a bit of a strategy, don't we? So we'll get to everybody, I'm sure. But if we've said no, not yet, it's just because we're kind of prioritising a little bit. I think it's fair to say.
Definitely, and we've been heavily focused on the estate agency world so far, haven't we? Those people selling houses, running businesses that are linked to directly selling and letting properties. And today we're talking about supply and the supply chain. So welcome Peter Brodnicki from Mortgage Advice Bureau, the CEO, to talk to us today about all things funding and finance and the mortgage world. Welcome, Peter.
Oh, thanks for inviting me.
So should we ask first what MAB, as people I think affectionately know it, what Mortgage Advice Bureau is? What is it?
Right. Well, I mean, we started off as a mortgage broker and then evolved our business probably in 2020 to be effectively a mortgage network. But in a very specialist sector. So we started our business purely focusing on estate agency, which is my background. I've been doing that.
So brokers in estate agencies?
For brokers and estate agents and firms, mortgage broking firms that dealt with estate agents or estate agents that ran their own in-house mortgage broking firms. That's what we decided to specialise in. And also sort of firms with strong lead flows and strong growth plans. We weren't sort of like a lot of networks are, a lot of one or two man bands. We were mostly about a specific sector, focus on the lead type, the lead flow, and that particular sector, and then build our proposition around the estate agency. And that's what we did. And since then, we've sort of obviously done well in that sector. It's still a huge part of what we do. But then we moved into other areas of specialisation. So we went into new build, again, another active space for us to be in, strong lead flow, great opportunity. So we acquired a firm in 2012 to give us that expertise, and then we scaled our model like we did with a estate agency, building bespoke technology, bespoke marketing, training, everything else to reflect that sector and really give them what they want and support the firms operating in those sectors. And then we moved into an acquisition a few years ago, more recently, to get into the comparison website space, the aggregator space. Wow. Again, a big centralised operation, different type of operating model for that sector.
And when did all this start, Peter? When did you?
2000 2000 was the year we started Mortgage Advice.
So next year, celebrating your 25th
anniversary.
Anything big planned?
Oh, yeah, what's happening?
Don't know.
Anything you can invite us to?
Yes.
Don't know. Yeah, I do like a party. Those that know me, I do throw a good party. I think that's one of the good things I do. So yeah, there might be.
And how did it start? Literally you with a laptop?
It started off actually. I was at Legal and General at the time, and but focusing on their estate agency side of their sector, and the independent mortgage brokers also work with them. I ran a team of business consultants to support those firms. And actually, one of those firms was a company called Mortgage Advice Bureau, and they were established in Derby. And in Derby, they had owned an estate agency called Ashton Adams, which was highly successful. Right, yes. They did a huge number of sales. I've never seen anything like it. And in fact, their top branch had like 4 brokers from one branch. It was that busy, wow. Doing about 100 mortgages a month. It was insane. And they had a mortgage shop, they had a surveying business and a lettings business. So it had all the disciplines. But they really wanted to grow their mortgage business. I went in there, looked at their business personally, gave them a report on what they should be doing. And then I guess they tried to get me across to come and run this new vision and grow this new business rather than just being Derby-centric and take the mortgage bit out on its own. And that's what I did. And, my background up to that point, through charcoal, for LNG and everything else had been a estate agency. So we focused on that sector first. So I invested in a small way in their business, then set up a new co. They took a small investment in that business, and then everything came into that business. And then we grew the different areas of specialisation as we went forward.
They talk about 5 steps of change in life and in business and in journeys. And so step 1 being that you have a dream, this is what you want to do. And then step 2, you take a leap and you actually start it. And then you get to step 3, which is often described as the messy middle. And in reading your recent article in the Mortgage Press, you talked a lot about that sort of messy middle around 2008, when rather than contract, you went gung-ho, we're going for this. You just talk about that brave decision and those moments of I'm going to push forward.
Yeah, and I think, generally in life, whenever everybody asks me about business, what makes you successful, it's very hard to really understand, but I think mostly it's because I'm not frightened of making decisions. And also, if you want to achieve something, spectacular in life or something, outstanding in life, you have to take risks. You have to not only make decisions, you have to take risks, but also if you make decisions, you've got to be prepared to U-turn very quickly the minute you understand you've made the wrong one.
And not fear failure.
Correct. And too many people, once they've understood they've made the mistake, will continue trying to prove that they were right. And so you've got to, number one, make a load of decisions. The more you make, the more you'll get wrong. You'll learn more from the wrong ones. You've got to U-turn very quickly, and you've got to take risks.
Yeah.
But calculated risks at the right time. So going back to your point in 2008, that was exactly it. Business disappeared overnight. We were at probably 40% of levels that we were today before virtually. So that was a big consideration at that time, and no one knew at that time how big this really was and how long it would actually last. And it had taken us up to 2008. So 2007 was probably the first year we'd actually made any real profit, because up to that point, obviously, it was just funding the business, reinvesting in the business, growing and growing and growing. And eventually we made some money. So then 2008 came, oh Christ. So all we basically did is sat down in a room. I said, right, we built a really good team. And this team is what we're about. The people in our business is what our business is about. And I'm not going to get rid of those people, and I should cut back costs. So what we've got to do if we don't get rid of people is we've got to justify the overhead we've got. So we've got to go into supercharge in terms of how we grow this business. And I've got 12 months to do it in, because this money I've just made is all I've got. So we're prepared to lose it, but not any more than that. And if we don't achieve that in that year, then we have to button down the hatches.
So you double down on income, your goal to
increase. Yeah, exactly. And our business model, I guess, in a way was built in a way that we wanted to be like a strategic partner for firms to help them grow their business, not just facilitate their business. So of course, in a market where your business is just more than halved, you don't grow, you replace. But the theory is exactly the same. So we took our model, and rather than cutting costs to try and attract business, we're reassuringly a little bit more expensive, but we gave real value for money. So we help businesses grow, and that's what we push for. And that was a real stepping stone for us. So that was one of those major first gambles, risks, and decisions we had to make. But it's, in a way, underplaying a little bit what we did. It's easier to stand out in a tough market if you go out there and do something different, which is what we did.
I love that phrase, supercharge. So we're going to galvanise those troops and get behind them. Incredible leadership, and then you start to climb. So you start to climb towards your vision, and then you arrive and dream again is the step. So and reading again the articles, you dreamt again and acquired. So talk through the acquisition strategy.
Yeah, so so we felt we were pretty good at estate agency. I'm never happy, always want to be better, obviously, and even today. But the next sector we identified was new build. So we thought, we're really good at estate agent. Let's knock on a few builders' doors, and got pushed back straight away. They go, you don't know anything about builders. That's a different market. So I thought, okay, it's going to be a little harder than I thought. So that was the time at which we looked at acquiring, and we acquired a company called Mortgage Talk that actually were in the estate agency sector. So there was some synergies with our business.
But they were a new build as well.
But they were also new build as well. Yeah. And had a really good guy called Andy Frankish at the time in new build who came across with us. So we didn't have the cash to buy them, so we gave a share exchange, to give them shares in our business. It was an interesting discussion because the business wasn't making any money, and but we needed that business. So
how did you blag it a little bit, Peter?
Well, I had a really very, very figures-minded operations director that basically said, whatever way you look at this, it's not worth what you need to pay for them. And I go, well, I know it's not worth what you need to pay for them, but it could be a real platform in terms of where we go from here. So the opportunity was there. So we had a good debate about it, but eventually I sort of overran and said, we need to do this. And we gave a stake in our business for a business that was making no money. But and then we did exactly what we did in the estate agency and built all those specializations around new build. We now got 23% of the new build market, and we're very ambitious to do an awful lot more.
And what point did you list the business on the stock exchange?
A few years after that, really. So just a few years afterwards. So
talk us through that moment. I mean, did you go to the stock exchange and kind of ring the bell kind of thing?
Yeah, there wasn't sort of bells anymore. I think it had all gone a bit digital by the time we've got
that
romantic image. Yeah. That romantic image has sort of disappeared.
But did you go on the day when you launched? That must have been an absolutely incredible and emotional time, that you've taken a business from zero up to the point you list it on the London Stock Exchange. Yeah. How did that feel?
Just before that, wasn't there a moment there where you were being advised by very many people around you not to do it?
Yes and no. I think what happened, what triggered the whole process, was that we got some interest in our business from people to buy it. A lot of them were in the estate agency sector, big corporate groups or networks. And being a bit of a control freak, I didn't really see I wanted to do that. And secondly, I couldn't see what value it was going to add. So at that point, we looked at listing instead. And we saw that enabled us, regardless of my shareholding, still retain full control because they're buying into the people.
But what was the motivation to list?
Because it took us, I think, to another level. In a way, it also was a bit of a halfway house where we put so much into this business. Everybody's worked so hard. We've gone through the global financial crisis and everything else. And it gives an opportunity to reward some of the people that stuck with me all that time. And, when I was at L&G, you used to get sort of share bonuses and things like that. And everybody was obsessed by the share price and saw that being the success of the business. I thought, I really wanted that because I thought that'd be really great for my staff.
But it wasn't just about your pocket then. It was very much about rewarding the team
and take them to that next level. So, to me, even the most junior staff could benefit from shares and tax efficient share options and all feel that they're part of something that's exciting and growing. And of course, when you are listed, everything's transparent, so the trust element of your business goes up dramatically because it's not just what you say, it's all out in public. So, and everything can be verified. So I thought in a way it gave us the objective of taking some money off the table after all those years, rewarding our staff and giving us a platform for the next stage of growth while still retaining full control of the business. Yeah. So that's what we did. But when we started the process, the market was flying. It was going crazy.
So when was this? What year?
2014.
Right.
But by the time we completed the process, which takes about 6 months, and of course the distraction and cost is insane. The market that week crashed by about 800-900 points in 2 days. So the only other two listings that week were Virgin and Miller Homes, and they both pulled out, as did everybody else in the weeks following and months following that, because the market was in a bit of turmoil. But we couldn't really afford to, because at that point I went, well, if we don't do this now, we're going to have to go through this whole process again and spend the same money all over again. And we need to get on with our day job. We can't do this anymore. So I basically took the view that we're just going to do the opposite to everybody else. And that's what we did.
Again, it's a theme. For the second time.
Second time. That was a big opposite swing. And I think even, I can't remember, it was the Financial Times or the Telegraph, I can't remember. But the chief financial editor or whatever said, because we were the only listing and we weren't a big company, it wasn't hardly a big story.
What was the valuation of the business at listing?
I think 80 million, at the time. So he said, this is the only listing that's happened on the market.
They're mad.
Literally the whole world is looking at this one tiny little company and going, Peter Brodnicki's either mad or a genius, so probably more mad and a bit of a gambler.
So you got it away though?
Got it away.
Yeah.
And it didn't, then it works.
And what happens to the share price for the next few days?
The next few days, I don't think everybody knew much about us because, we had to explain what a network was, what a broker was, how we work with estate agents and builders, etc. So people didn't really get. With investors, they have to put you in a box. Well, what you like? Are you like SJP? And I go, well, not really. They're trying to find something they invest in that feels similar.
Yeah.
So when you say we're the first ones to have listed, but being the first, you have to explain to the audience, and it takes time for people to get to understand your model, who you are, what you do, what the opportunity is. So the story was, well, you invest in estate agents, you invest in builders, and you invest in banks.
Yeah.
Well,
we're allied to that.
Well, invest in us, and we're far better, lower risk because you get access to all of them, and we're nationwide. We're not sector specific, so actually you can get all the growth out of those sectors by de-risking your model. So,
how many brokers would you have been at that point?
Probably about 600 or so.
Right.
I guess 600-700. Probably around that sort of road.
So an 80 million value back then in 2014 with 600.
Yeah.
Fast forward today, 2,000 brokers across the country.
About 2,000 brokers would have done more if the world hadn't.
And a market cap, which I checked this morning, of £513 million, Peter. So you're substantially up on what you were when you first listed. But if you don't mind me saying, you seem... what's the word? You seem to lament the fact that you're only listed or only valued at 513 million quid.
Well, yeah, I told you I'm hard to please and a bit of a control freak. So, yes, I'm a bit upset about that because we were at $750,000 before listed.
Billion.
Million, yeah.
Yeah.
And at that point, we did our biggest acquisition, which got us into the aggregator sort of price comparison website sector through Fluent Money. And that was nearly 100 million valuation. So that was massive for us. We'd never done anything like that before. And the whole purpose of that, if the year had followed as it should have done after that, we felt that would have taken us to £1 billion valuation. And then 6 months later, we were at 300 million, with everything that happened.
But you've had a great ride in the last 12 months. Your share price is up about 35-40% in the last 12 months.
It is. And I think, with investors want to sort of know that you're at the bottom because they're still affected by cycles. And there is nervousness, understandably, in property cycles, even though I personally believe you never lose a housing transaction. It's just a timing issue. Mm-hmm. So it got badly hit. It gets dragged down with a lot of other sectors, even though we were very resilient to it and always have been very resilient at any downturn. but you still have to live with it, and it's a timing thing. So we've just carried on, and what we've done in the last few years is just carry on investing because we've got a clear strategy what we want to achieve.
What more acquisitions?
Whether it's acquisitions, whether it's technology, how the intermediary market will look, how our position as a business will look, and how we generate leads and how we focus on the specialist sectors we focus on. You know, we've never stopped investing. So it was tough for us because, you know, income drops again, but I'm not going to sit back and put us back 2 years. So we carried on through investing through. So we could have shown more profit, but we decided to carry on our investment strategy. So that the only thing that really affected us was the timing of the growth rather than the eventual outcome that we were planning towards.
Where do you see technology playing its part going forward? AI is the absolute buzzword of the moment, isn't it? How do you see that in the mortgage market, and how a mortgage advice bureau adapting to AI?
Yeah, I mean, you know, you sort of use technology and AI as two virtually different sort of phrases now, and we have nearly 120 people in our tech teams over 3 locations. So, you know, we're bigger than a vast majority of tech companies, I think now, because we see it that important in terms of everything we do and how we plan and how we engage with customers, what customers expect from us, etc. So, you know, and that can be a frustrating thing to do with technology because it doesn't always go right, and you know, the risk you take by doing it yourself is things go wrong, and they have gone wrong for us. We made a few wrong decisions in terms of who ran that side of our business, and we've had to restructure on the back of that, but now we're in a really, really good place, and I'm you know, ultimately very pleased that we do what we do with technology. So, you know, there's a number of different ways I think technology will play a part. Everybody tends to focus on the process of the advice process and simplifying it, making it easier for the broker, making it easier for the client, far less paperwork, fast repetition, a speedier, easier process. So in that respect, yes, and I think AI would further enhance that by probably, again, taking the exceptionally strong proposition intermediaries have as being fully independent and advising customers, but also, I guess, making sure that we optimize the efficiency and the performance and consistency of every broker that works with us, which is great for the broker, great for the client. And that's sort of like AI's bit of a co-pilot. Is sort of helps us learn a lot more about our customers, how different customer groups behave, helps us turn our advice process and the customer outcomes we deliver to be a bit more of an exact science, knowing more about each customer type and
that contact strategy as well.
Exactly, and the contact strategy and how we nurture and capture customers and retain customers, and also how that broker can help more customers and engage with them in different ways and in a more personalised way. You know, in a way, we want to learn from every bit of contact we have, every transaction, positive or negative, whether we transact or don't transact. Whereas in the past, I think everything's been in the broker's head. You know, the information you have is on the mortgages you do. You don't have information on the lead you got in the first place and why you did or didn't convert. So now we're learning about everything. We're capturing customers 6, 12, 24 months before they even buy now. And so we could nurture them through that process and start looking at future customers rather than just hot customers ready to proceed today.
Because if you look at a house transaction, they say now people are moving once every 8 years, maybe.
No, it's more than that. Every 11 to 12. It used to be once every 7 or 8.
Yeah, in some parts of the country it's 20 plus.
Yeah,
and people are remortgaging every 2 years on a fixed, effectively. Yeah. So you could deal with that customer 6 times in
before they move.
Journey.
Well, since 2000 when we started, I think there's about 9 million properties that have not. There's been no move. Out of what, 36, 34, 35?
Let's talk about the market for a second then. So you talked about things ebbing and flowing, and obviously, you know, businesses being kind of dragged up or dragged down depending on what's happening with regard to, I guess, city perception around certain markets. General elections, changes of kind of political administration are, you know, always fraught with uncertainty. Markets hate uncertainty. Are you confident now that there's a new government and we've got the kind of previous political kind of shenanigans out the way, that the market's going to be better and, I guess, more certain? Are you more confident about the next 12 months in the property market?
Yeah, I'm going to have to be, because, you know, again, I fully support the principle of you never lose a housing transaction. So we will get back to normal transaction levels and we will make up the ones we've lost. But what we also want to do is make sure we can help more people get on the property ladder. So we're not just grabbing market share of the transactions that are happening, but we're more proactive and helping there be more transactions and do better with the customers that we're involved in.
Do you think there's more confidence now in the property?
I think there has to be, because you know, I mean, certainly in terms of new builders, there's some great messages coming out.
Well, the day after the Labour victory, all the house builder shares went up by about 5%.
Yeah, exactly, and rightly so, because you know that's clearly been a long-standing barrier to build the number and types of properties that are needed and types of communities that are needed really in the UK. So I think that's good, and you know, to be honest, it doesn't matter which government it is. the housing market's massively important to them.
Yeah.
You know, and underpins so much of the economy and how much spending there is in the economy related to property transactions, home improvements, whatever it might be. So, you know, it's absolutely crucial. And I think both governments, you know, parties were saying that they want to get home ownership back up to about 70%. So they share that objective.
From what, 62%?
Yeah, early to mid 60s. So that's a big focus. So, you know, to me, I think the underlying message is positive. I think what we've seen really in more recent years is that although we've probably over time used to cycles, these cycles aren't regular anymore. You know, and external factors worldwide are even COVID and things like that are things that just, you know, drive a horse and cart through any plans you might have.
Black swan moments.
Yeah, exactly. Yeah. But there's more of those, and so you've just got to make sure your business can cope with these better. Every single time anything happens, you're in a better position. You're learning. You know, so from our position now, you know, from 2008 right through everything that's happened since then, I think we've done really well in a downturn, and it's actually been a step-up platform moment for us.
But it's incredible how the property market has been so resilient over the last, let's say, the last 8 or 9 years since the prospect of Brexit, then the Brexit vote, then of course we had no-deal Brexit, then we had COVID, then the Ukraine war. I mean, the property market, and I don't want to get into a Charlie Lamdin type conversation, but transactions have ebbed and flowed a little bit. Values have kind of dipped slightly, come back again. I mean, who would have thought, maybe if we'd have been sitting here 5 or 6 years ago, that the property market would have been this resilient both in transaction and value terms, despite all that's been thrown at it.
And we're recording this on the 25th of July, and reading this morning, sub 4% 5-year fixed, I think, coming out, or fixed rate mortgages.
Yeah, you've got fixed 5 years under 4%, which is great, and you know, I think
pretty normal as well, by the way. Anyone watching this saying, "Well, that's still high," in historic terms, it really is.
No, you know, it's fantastic money, isn't it?
You know, and although, you know, a lot of these things are based on longer term rate predictions and swap rates, so, you know, ultimately,
and confidence in the economy.
Exactly. So that, you know, even though base rates might fall, which are the confidence barrier headline for customers, some of the pricing's already been built in, is coming in ahead of it, as you've seen. So you know, I think we're in a really good place, and you know, again, with all those external factors, I would fix it under 4% for 5 years all day long.
You would?
Yeah,
right.
Absolutely.
And next week, Bank of England sits. So one industry commentator and
50-50.
2,000 brokers. What do you think? Will they drop or not?
Well, they should. Absolutely, they should. We've now had 2 months of 2% inflation, which is the Bank of England target. Will the MPC have the guts to kind of unleash perhaps further inflation pressure by reducing rates? I don't know. I mean, it looks like from what the MPC members are saying, there are still some dissenters that want to keep rates where they are.
Yeah. Look, you know, I guess, you know, it was September, it was August, then it went to September, then there was a little movement back towards August. It's probably going to be September. We might see a couple of 0.25% drops this year.
I think what seems to have been
not going to be massive.
Yeah, 2 quarter point cuts by the end of the year. Right. Yeah, that seems to be what's priced.
Yeah, exactly. We'll look at that in December.
Well, but then again, if we're talking about the market, which obviously we're all very interested in as a property market, the signal that then sends, I think, to business and to consumers and mortgage holders is going to be incredibly positive. So I think, therefore, that the end of this year and the beginning of 2025, as a consequence, it should be pretty good for the industry.
If you're a buyer, you've got to be careful, because if you wait for the very cheapest rate, you know, before the cheapest rate comes out, because rates would have dropped by then, property prices will start.
Well, by the time you secure it,
demand will start. Demand will start. There's a huge amount of pent up demand. We can see that.
Yeah.
The minute the election result came out, if you look at online searches for mortgages, for example, and you always look at online searches first, because then it comes through to us as brokers 4 to 6 weeks later. They shot through, and we've just been on a flat line pretty much all year. Very rare to see that.
Well, as in lead level,
in inquiry levels, inquiry searches on mortgages. So that will follow. Obviously, we're in the middle of summer, and we're still waiting for that first half.
Yeah. So you think September it starts to really kick off?
I think it could really go. I think it could kick off, and it doesn't take a lot for that interest to pick back up, and then, you know, you're waiting for another 0.5% rate drop, and then your property price has gone up 2% or 3%.
Definitely.
So, you know, you're not going to get the best of both at the same time. It's not going to happen. You've just got to look.
But the lenders are confident by dropping those rates already, aren't they? By
What a bit of a price war.
Yeah.
Can we talk about Peter the man?
I was just going to ask
You're not a man that needs to work anymore, Peter Brodnicki. Why do you?
Oh, because I love it. It's something I you know.
I mean, you're a wealthy guy, right?
Yeah, but I don't. But I, you know.
You're still a big shareholder in
when
AIB?
I was poor, I spent what I had, and I spent what I have now.
You spend all you have now?
Well, yeah, because I'm a bit of an angel investor. I back people I like.
And a car lover, which we'll come to.
I've got a car habit, obviously. I don't play golf, so if I had to give up work, what am I going to do? So I love what I do, and I honestly think
you're still motivated
massively. I mean,
by
the
what?
money made makes no difference.
But by what? What are you motivated by? Because you made it.
well, what have you made? Because I never had this, number in mind. It's not a number; it's an achievement, and
that's ongoing.
Yeah, that's ongoing because and they're challenged, right? Because over all these years, I think we've done well, but ultimately, I think the next 5 years or so, the information we're going to have about our customers, the data we'll have, the technology we'll have, the AI will have,
just gets
how
more
we
exciting.
can run our business in a hugely more effective way, deliver even better customer outcomes, start helping people get on the housing market and do more. We haven't been able to do that. So this is the most exciting time ever. And I think there's been a lot of talk about tech, but a lot of stuff's been going on under here, and it's happening, and it's going to happen, and we want to drive that. And to me, I'm not going to go anywhere because this is really, really exciting.
But is it the eternal quest for £1 billion market cap?
Oh, I love round numbers like everybody else does. It's nice to have.
So do you get to £1 billion and then say, right, I've done it, and then you put your feet up?
Yeah, but it's not going to happen, is it? So
with
no,
you, I don't think it is. You're just going to keep going.
No, because then if I get to that, then I'm going to go, well, 2 billion is possible, isn't it? Yeah. But I'm not. It doesn't really matter because at the moment, I love my life. I'm really comfortable with what I do, but I work as hard as I ever do. I mean, I'm always start earliest, latest 6 o'clock in the morning. I'm always working. I love what I do. The opportunities now are just endless, and because everything I've just talked about opens so many doors, so many opportunities, sends my mind racing. There's so many things I want to do, so impatient for getting things done. So to me, this is exciting. The values are nice. It's nice for my staff. It's nice for my team and for the other people in my business as well. And it's always nice to have that tap on the back and go, that's a great number to get to. But that's not what's driving me. What's driving me is achieving what I have to achieve every day and what needs to be done within the business to achieve that opportunity. If I get that right, the rest will follow. But it's not about chasing a number.
Let's have a look at that as the day in the life of a CEO. So up at 6, check if Fulham have signed any new players. What other key KPIs are you looking
more
at?
How many have they sold today rather than how many they bought. That normally happens in the last 30 seconds of the transfer window.
What are the first things you look for at the start of a day? Share price straight away?
No.
What's the day in the life of a CEO?
I don't worry about the share price unless we just announced our results, and I do look at it. So to me, the reason I get up early is because no one bothers me early, so I can just get on with stuff, and that's where my thinking time is. And you can be so busy that you've got to look back and go, have you achieved what you're trying to achieve? So I'm always, a big part of my role is strategy, what the threats and opportunities the future delivers, and I don't micromanage my business, but I know every single part of my business. I've got great people around me, fantastic people around me. I'm so lucky, and I do deep dives around the business every so often just to make sure I'm up to speed with everything and challenging what's happening. But I don't want to micromanage, but I do want to be involved. I do want to understand, and I do want to contribute to every aspect across our business, and that's what I do. And I'm constantly redrawing loads of pictures, and to what I want to do and how I want to visualize stuff and what I need to be able to doing, and so that's what I do. And I get excited by talking to. I'm still, I'm a salesman going back to I was a mortgage advisor, and I still love going out and seeing new opportunities.
Network?
I still network. I still like to secure new opportunities for the business. I find that a real buzz. So.
And what else do you do? Is it just MAB, or do you have other interests?
I've got MAB is my full-time job. I put all my time into MAB. And over the years, and as I've released a bit of money from the business, I have done an angel investment, but only for people I tend to know.
Yeah.
So I started off with things in our industry, and now moved outside of things in the industry, quite diverse things. Some of those work, and some don't, like in all investments. But they're interesting. But what's really interesting is, that regardless of what you invest in, whether it's a golf course, I've got a dating company, fishing app, just a couple of examples.
That's pretty diverse. Sorry,
pretty
dating,
diverse.
fishing, and
Fishing
golf.
for dating.
Yeah, but that's the three thing, and mortgages. That's the 4 biggest things everybody does in their life, isn't it?
Right.
So, but the nice, interesting thing about it is, and I didn't probably realise that until I started looking at other businesses in the same way in detail, was 90% of each business is exactly the same. They have the same issues. How do I use technology? How do I attract customers? What's the cost of attracting customers? How do I retain customers? How do I recruit the right people, manage the right people, incentivize the right people? How do I do something different? How do I compete with new competitors? So actually, the base principle, the product's different, but the base principle is exactly the same. And that's been really fascinating, actually, and it's really helped me a little bit, even at MAB, understanding the similarities of different businesses. You sort of understand how much you could help other people just by, even though in completely different sectors.
Yeah. Yeah. So I've got 2 car lovers here then. So favourite car, Peter?
Oh God, they're all so different. I haven't got millions. I do have a few cars.
You got a few.
I've got a few.
That's some nice
And
ones.
during COVID, it was my first time that I thought I saw prices of classics come down. I wanted to get a few classics. I went out and got some classics. I saw the opportunity to do that there and then, and I love those as well. Aston Martin's my favourite brand and car.
Old on you.
Both. Yeah. And but I've got a few classic Ferraris and a few other bits and pieces. But that's, you know.
Well, they're
but
wise
they are
investments too. They're not just nice to have.
Yeah, exactly.
They're lovely investments.
And one of the things you do when you're lucky enough to have a bit of money, you start working out that the things, you know, I thought you only needed one watch in life and then you needed one car. Apparently not. You can have more than that. Yep. But the nice thing is, if they get the right ones, then, you know, artwork, cars, and watches, you don't pay any tax on the appreciation.
On the gains. Yeah.
But first and foremost, you've got to like it and want it. You know, not buy it as an investment and use it. You know, if I have a car, I use it. I don't put it in a little box and look at it. You know, I want to use everything.
You drive it. Yeah.
And so, if I'm a estate agent listening to this, or I'm a mortgage brokerage listening to this, and they're curious and they want to get more involved in what Mortgage Advice Bureau has to offer, how do they get in touch with your team, Peter? What's the best way for them to approach it?
Well, why don't you just contact me on LinkedIn?
Okay, to contact you directly.
Yeah, why not? You know, because I still get involved in all that. I speak to everybody in our distribution.
Well, golden opportunity.
So you're very, very welcome to it. I've got no problem in doing that whatsoever. And so yeah, just do that. And you know, from a estate agent's perspective, look, it's still the biggest part of what we do. I love it. I'm trying to work out how we can help estate agents more, because there's so much opportunity in estate agency, and they don't sort of pass. You know, I make a bit of a joke, but passing leads in a estate agency, passing mortgage leads has always been a nightmare. Most agents don't want to do it. Most aren't good at it. And, you know, so we're now finding other ways we can help them through digital means, AI means, to help them generate more leads from the data they have.
Without having to make the effort to do so.
Yeah, exactly. And if they do it, fantastic. And if they don't, we'll still help them with it. And also, there's this huge part of any estate agency business that we get zero leads out of, which is tenants and landlords. Tenants that are renting with view to buying, there's a lot of them, and landlords. And actually now we've just launched a massive retrofit solution, you know, to an end-to-end solution from initial quote to finance to actual delivery. And because we see that as a growing major part, you know, it's probably nearly 60% of properties are D or below rated. And we're working with our agents on that. It's a great tool to go to landlords with, because they're the biggest active segment actually proactively looking at the retrofit solution and an EPC rating. Maybe start breaking, you know, start building landlord apps, use the retrofit solution to start engaging with landlords and see where the opportunity is there, which I think will then knock on and benefit the estate agents, finding out which are renting with view to buying. And we've got a first-time buyer app. How do we get them purchase ready and bring the agent into that?
I'm seeing that mind map being written up.
Yeah,
it's coming to life.
Well, guys, I think that's our 30 minutes up, I'm afraid. We try and keep these to 30 minutes just so that they're
fascinating.
They're kind of bite-sized. Look, Peter Brodnicki, that has been fascinating, actually, both in terms of the insight into MAB, your business, your baby, that you've grown from nothing to what will soon be, I'm sure, £1 billion business. No, but an insight into you, and that's what this is about, really. It's to talk to individuals about them, their journey, their motivation, and actually, how people can be inspired by people like you. So thank you very much.
What a journey.
Peter Brodnicki.
No, thank you.
Thank you.
See you guys.
Well, that's it for now until the next one, episode 13. Should we skip 13?
No, we're going straight to 13. We're going straight to 13. We've got some amazing guests coming up, so please let us know who you'd like to see on the podcast. But for now, it's good night from me.
And it's good night from him.